Hi everybody, Jeff Yastine here. Let me ask you a question. What is the surest sign of insanity? In the case of Amazon, it is trying to break into the bricks and mortar supermarket industry, and each time expecting a different, i.e. better result, because it's just not happening. The latest effort comes to us from the Wall Street Journal, which told us late last week that Amazon is trying to launch a new grocery store business. Supposedly, this is going to be the biggest direct threat against America's supermarkets ever. Now, to me, this headline looks a lot like Amazon's, let's call it Stalingrad. As I've warned more than a few times now, Amazon is exhibiting what I believe is classic overreach behavior. To me, investors should take a step back and look at Amazon's forest instead of the trees. And what do we find? We find increased antitrust scrutiny, which I've warned about in past writings on banyanhill.com as well. We find a CEO, Jeff Bezos, embroiled in distracting personal issues. We find an HQ2 debacle that went nowhere after a year, and we have a tragic, deadly cargo jet crash in Texas amid rapid expansion of its air cargo fleet. And with all that, Amazon is going to take on not just Walmart, not just Target and the rest of the US supermarket industry, but also highly efficient, well-capitalized competitors such as Aldi's, which is in that super discount category and is well on its way to having more than 2,500 stores in the US by 2022 as well. Are you kidding me, Amazon? So nearly 2 years ago, I said Amazon's purchase of Whole Foods would be a failure, and that is the case. Consumers expected cheaper prices. The opposite happened. Customers started noticing things like rotting fruit in the displays that never would have happened under the founding management. And last month, Amazon quietly killed off its cheaper 365 stores. Those weren't working either, given the cost. Now, of course, sure, people still go to Whole Foods. The one near me is always busy. But when you're a company like Amazon with $232 billion in revenue, annual revenue, you have to sell a lot of groceries to move the needle even a little bit. And as for turning a profit, good luck with an industry, the supermarket industry, that usually makes do with profit margins of 1% to 2%. Now here's another example, Amazon Go. Last year, the company floated the idea that it would roll out 3,000 of these small format retail stores by 2021. Now, if it actually happened, it would mean a huge undertaking for any company. Amazon, by my count, would need to roll out roughly 80 stores a month for the next 3 years straight in order to achieve that goal. Now, maybe I'm wrong. Maybe the big push for Amazon Go is still yet to come as Amazon lines up its suppliers and its real estate and its leases, those sorts of things. But if you go to Google Maps and you type in Amazon Go for the continental US, you come up with a grand total of 13 Amazon Go stores. So Bezos and company needs to get hopping if they want to hit that 3,000 mark of Amazon Go stores by 2021. And it doesn't look like it's going to happen for me. I think it's really the retail equivalent of vaporware, which is the old software joke about companies that would say they're coming out with updates or programs by a certain date, and it didn't happen. It never happens according to that date. I don't think it's going to happen for Amazon either. Now, if you doubt what I'm saying, think about the troubles that we've seen with Lidl, which is a competitor of Aldi's and made a big splash 2 years ago by saying it was going to come into the US with a big expansion. Experts have since called it a singular catastrophe by a hard-charging company that thought it had the US supermarket industry all figured out, and it didn't. And I ask you, does that sound familiar when you think about what Amazon is hoping to achieve as well? And if you want to see the biggest proof of Amazon's failure in the physical retail grocery store space, think about this. According to SEC filings, the company had 6% less physical retail square footage at the end of 2018 than it did in the year before. Now, according to the company, the discrepancy is because it no longer includes stores under development in its numbers. But I can tell you, as a former financial journalist, I've seen this sort of thing before. In the corporate world, when something's not working, think about Apple last year when it stopped reporting iPhone sales. Executives have three options. They can tweak their statistics, they can move the goalposts, or better yet, they can make those goalposts disappear. If I were Amazon, bestowed by investors with a much hyped air of invincibility, I'd quietly disappear key portions of my physical retail stats as well. Something to think about if you're an Amazon investor. If you like what I'm talking about, make sure to click the screen. And until then, I'm Jeff Yastine.